Well, I think, Northzone, we are celebrating 25 years today, actually, and we have seen markets go up and down quite a lot over these years. But most importantly, we've seen sort of the emergence of a very, very strong tech ecosystem that now also is meeting the public markets in meaningful ways. And I think up until maybe a few years back, the listing venues in New York were probably pretty much the only alternative for really large outcomes. However, I think in the last few years, London, Stockholm, Amsterdam has started to actually to be really competitive also for European startups when they are growing into the public markets. And we've seen some really successful stock listings, and we expect more of that to come.
And, I think in part what you're saying is a real dig at the advisory segment that tries to encourage entrepreneurs to go early to the market here. What about some of the alternative models that are advisor light and don't involve the banks? To what extent would you encourage entrepreneurs to look at those?
Well, the alternative models are, they have their specific use cases. And, I was involved in the Spotify direct listing, which is a very strong model. If you have a business model that is already generating cash and you have no actual need to raise cash, and that's a way to actually get to the market with less dilution and less cost. But it's not for every company, that's for sure. And I think the SPAC alternative is also for a very, very specific scenario where you're sitting on a window of time where the company is actually ready to go public, and there is a SPAC on the other end that is waiting to de-SPAC with the kind of also investor backing and sponsors that really know and understand your business. So very specific use cases. And I think that's a sign of a developing market that is starting to find horses for courses, so to speak.